Consumer sector meltdown, down 1.43% this week, with a bearish trend taking hold, driven by rising inflation, now a critical risk. This is what every serious investor needs to know about consumer right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. As we enter the last week of April, the overall market context is characterized by relatively normal conditions, with the VIX sitting at 19.2, indicating a moderate level of volatility. In this environment, the consumer sector is particularly noteworthy, as it has slightly underperformed the S&P 500 this week. The consumer sector ETF, XLY, has posted a decline of 1.43%, which may seem minor, but warrants our attention nonetheless. The consumer sector is a critical component of the U.S. economy, accounting for a significant portion of GDP, and its performance can have far-reaching implications for the broader market. Given its influence, it is essential to closely monitor the sector's trends and dynamics, especially during periods of shifting consumer behavior and spending patterns. As investors, it is crucial to stay informed about the sector's prospects, and that is why we are dedicating this video to a deep dive analysis of the consumer sector. This is educational content, not financial advice, so please keep that in mind as we explore the sector's intricacies. Let us start with the technical picture and what the charts are telling us. The consumer sector, as represented by the XLY ETF, has experienced a weekly decline of 1.43%, although it is still up 7.19% on a monthly basis. The RSI reading of 63 implies that the sector is in a moderately overbought position, which can be a bearish signal. This suggests that the momentum may be slowing down, and a potential consolidation or pullback could be on the horizon. The trend direction is still positive, but the conviction is waning, indicating a possible loss of upside momentum. Key support levels are likely to exist near the recent breakout points, while resistance levels may be seen at the recent highs. The current move appears to be an extended overreach, rather than a sustainable breakout, as the sector has been pushing higher without a significant pause. A technical setup worth watching this week is the potential for a pullback to the support levels, which could lead to a consolidation phase. This would allow the sector to recharge and potentially renew its upward momentum. Now let us look at the fundamental catalysts driving this sector. The consumer sector is poised for a significant week, with several macroeconomic events set to influence its trajectory. The GDP advance estimate for Q1 2026, PCE inflation data, and non-farm payrolls will provide valuable insights into the overall health of the economy, and by extension, the consumer sector. As we analyze the key stocks in this space, including AMZN, TSLA, MCD, and Nike, we notice a mixed bag of signals, with some indicating resilience in consumer spending, while others point to potential headwinds. It is essential to remember that this is educational content and not financial advice. The normal market conditions, with the VIX at 19.2, suggest a relatively stable environment, which could support consumer discretionary spending. The longer-term fundamental thesis for this sector remains intact, driven by the ongoing shift to online retail, the resurgence of travel and luxury spending, and the steady demand for autos. As we consider the potential impact of this week's economic events, it is crucial to keep in mind that the consumer sector is highly sensitive to changes in consumer confidence and spending patterns. The key stocks in this sector will likely be influenced by the upcoming earnings reports, regulatory news, and macro data, which could lead to a re-evaluation of the sector's growth prospects. With the current market regime characterized by normal conditions, investors should be prepared to adapt to any changes in the economic landscape. Next, let us talk about the specific risks you need to manage this week. The consumer sector is facing significant risks this week, including rising inflation and interest rates, which could erode consumer spending power, and a potential slowdown in global economic growth, which could impact consumer confidence. Additionally, supply chain disruptions remain a concern, particularly for companies with complex global supply chains. Given the current volatility environment, with the VIX at 19.2, investors should be mindful of position sizing and consider scaling back exposure to high-risk names. Unexpected headwinds, such as a surprise interest rate hike or a major supply chain disruption, could further exacerbate volatility. To manage downside exposure, investors should maintain a disciplined framework, including stop-loss orders and regular portfolio rebalancing. By taking a proactive approach to risk management, investors can help mitigate potential losses and protect their portfolios. And now for the strategic outlook. Where does consumer stand heading into next week? We maintain a cautious stance on the consumer sector this week, due to rising inflation concerns. A key theme to track is shifting consumer spending habits. This is educational content, not financial advice. For more insights, like and subscribe to Financial Market Oracle, and comment your consumer watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.